Okay, folks, good morning and welcome to Members Stock Chart Request. This is where we review the health of the overall markets and we review the symbols of our members. Last night we went over in Market Wrap where I believe this market was going. We discussed our positions. So members, if you haven't seen that yet, go to the members area, sign in and take a look at that. For the purposes of this discussion, we'll review how the markets appear poised to open up this morning. And it doesn't look good. And I mentioned last night that I had my concerns about yesterday's rally and our action plan with certain stocks should we get a pullback. So please go check out that commentary from last night, Market Wrap. So the Dow Jones this morning is down nearly 0.7%. The S&P futures down as well, nearly 0.6 of a percentage point. The dollar. Now, this is the real story here of the morning. Overnight, you had British inflation come out higher than expected. Now, why does that matter? While they're no longer a member of the Eurozone, they are currently going through a divorce. They are in Europe. Now, to date, the European Central Bank has been reluctant due to the fact that there's no inflation to raise rates. Where we've been raising rates since Q4 2015, they haven't even begun yet, and we're near an end of a cycle. And you may be saying, who told you that we're near an end of the cycle? Folks, look at the stock market. We are near an end of a cycle, while the Europeans are just gearing up. So the dollar is taking it on the chin. Now, we were patient with the dollar, looking to see whether or not it could break out. I have been bearish on the dollar, believing it to be a flawed currency and in a full-fledged bear market. Yesterday, it held up fairly well, but on the news out of Europe, it is getting crushed. Now, what does that mean for our bull positions? They're going to do great because we've expected just this type of an event. We aren't long of gold, but we have exposure to the gold mining names. And gold is moving higher this morning, but I will admit, not as high as I might have expected. And we are off the session lows. So I wouldn't go chasing gold here until we see a settle out of the dollar and how the price of gold responds. And I would like to see a breakout on gold before we got even more aggressive with this position. Now, taking a look at commodities such as oil, which is priced in dollars, firming up here a bit, possibly putting it in a higher low. We won't know if it's a higher low until we break out. So let's watch oil. We're very close to a breakout above a secondary downtrend line here. I wouldn't be an aggressive buyer of oil until we broke out above $65 per barrel. And taking a look at other commodities such as oats, they are ripping through the ceiling. We have been bullish on the ag names for quite some time. Corn, higher lows, consolidating, poised for higher highs. Wheat, higher lows, setting up for higher highs. So we're seeing inflationary pressures in agriculture, and that is one of our hot sectors. So members, more to come on how we plan on trading the agriculture names. Let's leave off with Bitcoin. Over the past several days, they've rallied, but we're down sharply this morning, about 4.23%. We're attempting a rally back now, but I wouldn't be a buyer until we rallied up and through this resistance level here, and ideally up and through the 9,000 level. Members, let's go to your stock chart request. Okay, first chart up, Real Good Solar RGSE. We remain in a downtrend. We have not broken out of it yet. It's just stopped going down. When do we know that downtrend is over? When we clear and close above 175 on a weekly basis. We must close out the week. Now, if oil begins to move higher, I would expect to see these shares move higher as well. We have a W formation forming on Stokes, which is bullish. While the share price has been under pressure of late, RSI has just consolidated sideways. I'm looking for a breakout on RSI here. Take note of, while the shares have been under pressure, Ultimate Oscillator is actually hooking up. So these are just signals by the market. just to watch out for, not something to trade off of necessarily. I would prefer to buy on strength here. And all we're seeing is a bit of a respite of selling with a bias to the upside now. Daily chart, we're putting in higher lows on RSI, but we continue to have lower highs. So no break of that trend yet. A beginning of a W formation is forming. I drew this here, this blue line, because this is what you want to see, a W formation on your Stokes. Now, if you wanted to buy here on spec, just use a stop loss order right below 1.11 and get yourself taken out of that position. Add to that position on a breakout and up and through 1.50 on a closing basis. You want to make sure it closes above that level. Goldman Sachs active beta emerging markets. Oh boy, that's a mouthful. All right, so we have the devil incarnate mixed in with active beta and emerging markets. So this has to be really, really volatile. So weekly chart, let's put an overlay here to see how exactly these shares correlate with emerging markets, because names could be deceiving. Okay, so overlaid here in blue, I have the EEM, which is the emerging markets ETF. And yeah, there's a good correlation between the GEM and the EEM, so check that box. Daily chart. Well, before we leave weekly chart, we are testing the lower band of the rising uptrend channel. So a break below this week's lows, in fact, would have me out of these shares if I were long, or if I were opening up a position where I would want to put my stop. If you wanted to keep it loose, use a stop right below last week's lows at 34.15. Daily chart, not loving the RSI here. We moved higher on Friday and Monday, but we hit resistance. Now, the weak US dollar should do well for the emerging markets plays. If you do not see the emerging markets rally on a pullback in the US dollar, there's something wrong. So the ideal setup here would be this, is that we pull back and retest the 34.15 level. That would be a double bottom retest. As it stands right now, what I'm looking at is a chart that has had a dead cat bounce after a vicious sell-off. I don't see a base yet. I see shorts covering and some undisciplined buyers stepping in and buying shares where they probably shouldn't be. Now, if we close above 35.66 and we consolidate there for a few days, we'll revisit it. But the ideal scenario is that we pull back, retest the support level here, it holds, then we can open up a position with a stop right below and enjoy a rally higher. Volume yesterday dropped off dramatically versus Friday. I still think you have some backing and filling here. I see no reason to get aggressive to the long side at this point in time. Avnet, AVT, weekly chart. Now, on a weekly basis last week, we broke down below the lower band of the rising uptrend channel. No good. Now, what will probably happen here, we may just limp back up higher, trying to recapture that prior support level, which is now going to act as resistance. So I couldn't condone a buy of these shares right now. Not with this kind of weakness, technically. We have broken down on RSI. We have lower highs on stochastics. So the weekly chart is not looking good here. Daily chart. So what if you're compelled? There's no matter what, come hell or high water, you're going to buy these shares. You're just looking for validation, but you're not getting it. So let's plan our exit strategy right now, just in case. All right, so we managed to bounce off of 38.50. That was good support. So the market has sent us a signal that it respects that level. But now we're up at $40.50, very close to it. So we've come a bit of a ways here. So buying it at these levels is a bit of a gamble, but if you're going to execute that trade, use a stop right below 39.50, because if it breaks, in all probability, we're going to come back down and retest this 38.55 level. If that breaks, we'll probably come all the way down to 35.35. So be very, very disciplined with your stop loss order here. if you execute the trade. Now, what I will say is that we are forming a W formation on the Stokes. Will they form a higher low and proceed higher? Not quite sure yet, right? The only guarantee that we have, and it's not even a guarantee if the shares gap down, is how much of a loss we want to take. So let's focus on our downside, and the upside will take care of itself. Now, for those out there that are scratching their head saying, what are you talking about, a double bottom setup or a W formation on Stokes? Stocks, ETFs have characteristics historically. And just like you had back here, you have double bottom setups on these shares using the stochastic. Same deal here for RSI. So that's how I would play these shares. And if you get a breakout above 41.39, I would get a little bit more aggressive. And then, of course, as we broke out to new higher highs, you'd add more to your position. Volume yesterday was not good. No bueno on this rally back. And the topping tails here tell me $40.50. You have sellers above. Historical support, overhead supply. I don't mean to be too dire, but this weekly chart has me nervous. And the fact that the futures market is down so big doesn't help either. Another emerging markets ETF, which is the VWO, the Vanguard Index. A nice run, a great company. We're at support. The dollar is pulling back now, which is good for emerging markets. So this is a good support level. It should hold. Daily chart. Now, as I said with the prior Goldman Sachs emerging markets ETF, the ideal situation here is that we get a pullback and a double bottom setup off of 44.34. If the dollar really continues to drop dramatically, we may not get that opportunity, but I would certainly use a stop underneath that level, because if it breaks, we'll probably take out the support level here. So if I were to open up a position in these shares, I would keep it small, keep your stop small, and especially if the dollar gets a bid and begins to move back up again, don't go adding on a pullback until we're retested and you see the dollar roll over. And you hear me talking a lot about the US dollar today. It's because we're talking a lot about emerging markets, and a pullback in the US dollar is like a tax cut for emerging markets. So when the dollar goes down, emerging markets go up. Scorpio Bulkers, this is a tanking company. You know, I started off taking a look first at a weekly chart. And the reason why I use weekly charts primarily is because the daily charts are so noisy. But I'm taking my crayon out and I'm drawing all these lines. I'm saying, Jesus Christ, even this chart is noisy. So I decided, you know what, let's keep it really simple. Let's go to a monthly chart. We're nearly halfway through the month now, and you can see how it really cleans it up nicely. And we broke out on SALT right here back in January of 2017. And ever since then, we've been trading sideways. Now, here's your primary downtrend line here. And we have broken out above it. And we continue to trade sideways. When do you want to buy these shares? Ideally, on a rally up and through 8.45, and then add more aggressively on a breakout and above 10.11. Because if we broke out of this long-term cup with handle base, we're going a lot higher. And I use as a contrarian indicator many times. I speak frequently about my sister-in-law, the hairdresser, who starts asking me questions about Bitcoin and the stock market, and I knew the top was in. And it wasn't just her. But when my members come to me, and they're a smart group, when they come to me and I keep hearing more and more about the tanker companies, the dry bulk shippers, well, then I had better look, because there's something going on here. So this long-term base cannot be ignored, because there's a saying, the longer the base, the higher the space, meaning the longer the breakout, the higher the rally. So this is a really sharp-looking chart here. Now, on a daily basis, there's really not much to talk about here. It's a god-darn mess, right? I would rather focus on my monthly chart. Keep it really simple. You want to scratch the itch? Scratch the itch. Buy a few shares. Put a stop loss right below 6.48. Get yourself out. Then add more on strength. And that's how I would play it. Forget the daily chart here. Bank of America, weekly chart. Yields are going higher, right? Supposed to be great for the banks. Nada. Why is that happening? If you have a slowdown in the U.S. economy, which is feared, loan demand will dry up. So while the margins you're making on your existing loans will expand, you're not making as much of them. So the banks are in a little bit of no man's land right now. They haven't broken trend. Their trend is still up, no doubt about it. But we are at current right in the middle of that trading range. So the weekly chart is a bit inconclusive for me. We have no breakdown yet on our indicators. Daily chart. Now, this is a concern. This backing and filling here is a major concern to me. Why? On top of each one of these candlesticks are wicks. Not each one of them, a few of them, especially yesterday. Wicks, some call them shadows, call them cupcakes. I don't care. What they imply is that you have sellers above, right at this resistance level here at 31.79. Oddly enough, where do we find indecision? Right back at 31.79 when BAC flashed this hollow-filled candlestick. And it wasn't soon thereafter that we rolled over. Now, also, what I find concerning is that both lines on Stokes are trading down below the 50 level. And what happens when you have both lines on Stokes, which are declining and down below 50? Rallies fade. So when would I buy the shares of BAC? One, on a pullback and a retest of prior support. We may not get all the way down to 29.15. We may put in a higher low. That's fine. When else would I look to buy? If we clear this resistance level here and close back above 31.79, I'd become interested. I'd become really interested on a rally up and through 32.67. And some of you out there who are not as familiar with our style of trading may be saying, wait a minute, what's wrong with you? You want to pay more for a stock? Yeah, I do. I want to pay more for the probability of being right rather than gambling that I'm buying in the middle of a trading range with evidence of sellers above, hoping that I'm right. I hate hoping. I want to buy when I'm sure that my bets are being pressed in the direction of which the shares are heading. So a bit of a warning flag on the track here for the banks and BAC. PepsiCo, they were taken down last week with the market, obviously. We found support at 108.88. We overshot support at 110.70. This is a good support level. Is it a buy now? Maybe. If you do buy it based upon the weekly chart as an investment, you really need to use a stop right below that 108.88 level, because if it breaks, we're coming down here to 105.46. Daily chart. All right, so an interesting setup here in that we had a W formation form back in October and November, which sent us up to recent highs. This support level is looking good yet again. We could be forming the left side of our W right now. Expect a pullback, a rally, center of a W, and then another pullback and a retest. And then ideally a move higher. We need to form a base here. So were I long the shares? Would I sell them? No. You just need to be a bit patient right now because they're not going straight up anytime soon. You're going to need to see a consolidation. I'm liking the Stokes. They're getting mature. But I'd want to buy that pullback and a retest of 108.88. Put a stop right below that level, and you're all good. And that's it, folks. Members, I will be in the forum this evening, and we'll do a market wrap. So if you have any questions, post them there in the forum, and I will get back to you. Everybody have a profitable trading day. Be well.